Kim here. Welcome to the market update. Again, my name is Kim with the Traders Club. I am traveling this weekend, and so I thought I'll do this day early for you guys today. Let's keep it simple today because last week I've done 2 videos totaling about 40-45 minutes, and we looked at all the indices and the sectors, and I also did long-term analysis on the indices, so you can go ahead and check that out if you didn't watch it, so you can kind of go, you can understand kind of a long-term perspective. But today we're going to keep it simple and succinct. So we're going to look at Spider and the Qs, and we'll call it a day. Let's go through Spider here, and since last week, you can see that we did find support in that vicinity here, rising uptrend support. 200 and we did undercut it, but that kind of stuff happens all the time. That's why you don't want to look at these moving averages and support levels to be fixated on it or to be meticulous about it, or you know what I mean. It's the area, it's the vicinity that is important. So it was a 200 SMA. Technically, they are still rising. Just like when this thing came straight down, technically 200 SMA or 100 SMA, 200 SMA was still rising. Today, are they still rising? Yes, they're still rising. What does that mean? It means you want to give benefit of the doubt to the buyers in the primary term. That means primary term uptrend is still bullish, right? So as of today though, you can see that a couple days ago we got up here, so nice big up move and gap up move here, and then we got into a 100 SMA. We kind of stalling here. We did a little bit of doji. We're falling back. Again, that kind of stuff happens a lot because even if you look at this here, we saw a big bullish move. We threw a little bit of bull flag here. You saw that big bullish move. You see that big bullish candle right here? You see that big bullish candle right there? We saw that doji, and the next day what happened? That thing came down, right? Right here. Here, let me... Right there. You can see right there. Right here. And then like some shenanigan moves right here. Right? We got that big bullish candle. Down next day. So after kind of a big bullish candle, you're bound to see something like this. You know what I mean? Like sometimes you see a follow through, sometimes you see a pullback. But I think what's really most important, not so much as what happened last few days, what's really most important is this gap. And we've been tracking gaps all year long if you've been following me, and I get a pretty good feedbacks on those with my followers and emails, and I get emails and things like that that these gap analysis has been really helping them with understanding levels and things like that. So again, here's another gap. So I think that's a critical point here. Obviously, once the gap gets filled, a lot of times it does tend to act as support. You can see right here, this gap, right? This gap was filled. You see that? And then that acted as support. But it opened another gap right here. It was open because that was closed here, open there, right? It got up, came down, and filled it. And then that acted as support here. So we got this gap, right? So gap is always a good thing. When you see a gap, it's bulls deploying this gap so that, you know, if there's some kind of shenanigan, that you can use it as a shield when the bull bears come in March, right? Same thing happened here. You can see this gap was filled. You see this gap? That was filled, and that was currently acting as support. And you can see just a few days ago, we got above, then we saw buyers coming in, and bulls opened up another gap here, and that's a good sign. So we're going to track that. We'll follow up on it next week. What I like to see, doesn't mean it's going to happen though. What I like to see is I like to see this gap remains open throughout tomorrow and next week. If we can do that, if the bulls can able to protect this gap, this minor term sentiment could be much more bullish. However, if the gap does get filled, it's not really end of the world. You can see this gap. See this gap right here. That's gap right there. That was filled, but remember that became support. So if the gap gets filled, it's also probably going to act as support there. But if the gap doesn't get filled, we can categorize this gap as a breakaway gap. So we could see some swift move to the upside. But let's see how it plays out here next week. Currently, you can see a little bit of dip buying. Kind of that gap is getting protected. Bulls are fighting to protect this gap for now, but it's tough to say if that's gonna get unfilled or it's gonna fill. So we'll follow up next week. We'll go from there. I'm just kind of looking at my other screens here. I think Obviously, next level to overcome in the minor term will be this level right here at 280, right? That's where the 100 SMA is residing. We got the 20 EMA in there. You can see 50 EMA also is in that vicinity as well. And you know, like last time, you can see 20 and 50 just 20 and 50 EMAs just crossed here. And last time we saw that 20 and 50 EMA crossing right here, and then that kind of made things a little bit hectic here, some up and downs. But what was important was that we were cultivating these higher lows here after filling this gap that kind of became that support level, and that was where we saw that bullish move. So that 50-20 crossing to the downside kind of signifies that the minor term sentiment is bearish, and it's not going to be easy here, where things could get a little bit volatile, some up and downs and things like that. So we'll kind of keep track of that. We'll follow with the next week, and we'll go from there. See if you can see this gap getting filled, and we'll go from there. Let's go to Qs. Qs. Good news about Qs though, we got bigger gap on the Qs, because you can see this day, October 11th, we saw this. This is where it closed. This is where it opened. You see, so we got this hit a big gap, but it ended up coming down in the intraday, filled a partial gap, but you can see this gap remained open, right? And then what happened was 2 days later on the 15th, what happened was it closed here. You see, that's where it closed. Here, let me zoom in here. You can see better here. So it closed here, it opened here on the 16th, opened there. So we opened up another gap. So we actually got double gap on the Qs. We don't have it on Spider, but we have it on the Qs. So this makes it a little bit more sturdy, right? We got two gaps here, so that means we got two level of supports here, right? And that makes this gap this much bigger. Bigger the gap, better it is. So obviously, you know, bears been opening gaps as well. We got this tiny, we got a little bit gap there, this downside gap. We got this downside gap. We got another downside gap. But bulls have opened this bigger gap here. So I think if we can able to kind of, if bulls can able to protect it, or even possibly if this thing does come down and fill this gap, that probably going to act as support. And then we're probably going to see some intraday, short-term buying pressure there, but currently we're just right at this level. I mean, I am recording this midday. Market should be open another 3 hours. So keep in mind, I am recording this intraday. Market should be open another 3 hours on Thursday afternoon, Thursday 18th afternoon. So I think this is a level to watch here. Obviously, next level to overcome will be this high right here. So that will be the first level. I think this is kind of an important level. Prior resistance is possibly a new prior supports, possibly new resistance at this point. 100 SMA, 50 MA in that vicinity. So for the bulls to bring it up, or to kind of get that control again, you would want to see Qs to kind of get up here and then start to cultivate higher lows and higher highs like this. So we got 173, 169, the gap area. We're just trading it in that vicinity here. Bears are trying really, really hard to come down and fill this gap. And if the bears do feel this is the first level gap here, and we got second level gap there, probably gonna do active support. But good news is that in the minor term, bulls open this gap, and that's a pretty sizable gap. So I think we can, if we can able to find this, if we can able to protect this gap, that is going to be much more bullish in the minor term. But remember what I said just earlier in this video, that once the gap gets filled, a lot of times it does act as strong support. Remember, again, we talked about this on Spider. You see that gap was filled and acted support, right? Same thing, this gap right here. There's a gap here that was filled and that acted support. This is why tracking gaps is important, especially when the gap is a pretty good size here. This is a pretty decent size. We're still holding this rising uptrend support. Not only that, if you do a little bit of Fibonacci here, you can from here to here, this is perfectly that 50% retracement coinciding with the rising uptrend support and coinciding with the 200 SMA, which is in that vicinity. I mean, when you look at Qs, this is a very, very normal process, right? Market goes up, market pulls back about this level, and then that's how the trend gets develop, right? So we got this higher lows and higher highs. When you look at Qs, actually, it looks so much like just normal price action. As it gets a little bit more like scary, quote unquote, here, because I mean, it kind of plow right through some of these supports here. But when you look at Qs, obviously Qs doing so much better, 13% year to date. S&P only up 5%. It was up as much as I think 12%, but it got wiped out 5% year to date. So, excuse me. So 50% there. We're just holding at the gap area. I kind of feel like, I mean, towards the end of the day, we may see some bounce here because we're retesting the gap area. If not, I think that if the gap gets filled, we want to see maybe partial gap gets filled, but maybe this gap still holding and then possibly getting back up here. But again, with the 20 and 50 MA declining, I have to categorize this minor term sentiment bearish. Same thing as spider, minor term sentiment bearish. However, intermediate term on the spider, I want to say neutral to bullish, but Qs, I want to say in the intermediate term, excuse me, bullish. Intermediate term bullish on the Qs. So much more bullish sentiment on the Qs here, and minor term bearish, obviously primary term bullish on both of those. So let's see how it plays out, guys, and we'll go from there. Again, I'll be traveling this weekend, and so I'll be back to you guys next week, Friday, on a regular schedule for the market update video. And since I'll be traveling, you're probably not going to hear a lot from me. You know, when I travel, I tend to not use Twitter and things like that, so I'm probably not going to do a whole lot of updates on my post or tweeting out much. So again, so if you don't hear from me next week because I'm traveling, I'll do my best. I mean, I am bringing my laptop. It's not like my 8 screens trading station here, but I'll look at it, you know, in the morning. If I see something like that, I'll try to tweet it out and things like that. But if you don't hear from me, I'll come back to you guys on Friday, next Friday, which is the 26th, and I'll give you guys an update on the gap areas and the levels, and see if the gap held or if that gap got filled, and see how they're doing then. So, well, you guys enjoy your weekend, and good luck trading next week.